What is going on, investors? Hopefully you guys are having a great weekend. Welcome to the Weekend Stock Show here on the Investor Channel. We'll take a look back at what happened last week, but even more importantly, what is going to happen in the week ahead. And I tell you what, we're headed for a big time week next week with earnings. I'll show you just really quickly all the companies. This is not all the companies. These are all the major companies that are going to report earnings next week. So we'll talk about the calendar here in a minute. I'll also talk about different strategies you might have when you have these types of earnings coming into next week. You should probably have a shopping list. You should have a plan because we could see some major moves in some of these stocks. As we saw this week with Netflix, this is a stock that traded down about 10%. If it's a stock that you wanted to get into, a stock that you like, well, you got a 10% discount. We'll talk more about that in a minute. We're going to talk about Joe Biden's potential corporate tax plan and capital gains taxes, the strategies you could potentially implement there. We'll obviously touch on earnings from last week. I think the two major ones that I think were Netflix and AT&T for two different reasons. We'll talk about the upcoming earnings, and then we'll also talk about how Bitcoin had a major drawdown last week. It was trading up into about the 60,000s last time we had a show. Now it's touching closer to 50,000. We'll talk about if that pullback in Bitcoin has created a buying opportunity. And we got to talk about Dogecoin too. So we'll throw in Dogecoin as well. A lot of the cryptos saw a major pullback last week. We'll see if they've pulled into ranges where you could potentially buy these if you have a crypto portfolio. If you want a crypto portfolio, I want to thank everybody that used my sign up link. I had no idea how many of you guys would actually utilize that. I have a link down below in the description to Coinbase and Robinhood, which give you access to cryptocurrencies. Man, I was getting free Bitcoin every other day. I really appreciate those of you that took advantage of it. You do support the show, and I do appreciate that. Now let's jump into things here. Last week, the S&P 500 basically flat, okay? Ended the week down 0.07%, but we had two different kind of like big drawdowns on this one, and it snapped back. So you have a market right now that is sensitive to news, but then it snaps right back. So the QQQs did the same thing, down 0.53%. We saw the big drawdown on Friday based on the tax news, which we'll talk about here in a second. But then boom, snapped right back the next day. And so the Dow Jones, NASDAQ all turned higher after kind of a knee-jerk reaction to this tax hike, which we'll talk about here right now. So President Joe Biden, currently investors pay a 23.8% top rates for long-term capital gains. Long-term capital gains is if you buy a share today and then you sell it a year, and we'll give you another day from now. That is a year's holding times. You are subject to long-term capital gains. Now, there is short-term capital gains as well, which is taxed at a higher rate. And so people ask me, do you trade? Do you do a lot of trading? Personally, I live in a high-tax state. I live in beautiful California. I was just out playing golf this morning. Look, the weather's beautiful here, but guess what's not beautiful is the taxes you have to pay. And short-term capital gains on top of the state income tax that I would have to pay on that doesn't necessarily make trading super profitable, in my opinion, here in the Sunshine State. Now, where you live could be an excellent way to make money. And look, I know some traders. I personally know traders here in California that are doing really well for themselves. So it can be done. It's just something that I tend to avoid. So I'm not saying that out here in California you can't day trade if you don't want to. You certainly could, but you are subject to higher taxes. Now, investors currently pay this 23% rate, and it was floated in the news that President Joe Biden wants to raise this to like over 40%. And here in California and in New York, where they have excessively high taxes, the rate would be over 50%. So think about that. If you bought a stock and you made $1,000 profit on it and you sold it a year later, you would owe more than half of those profits in taxes. I mean, it's insane. And look, the law that's being spread is for people that have incomes over $1 million. So let's just say you're retired. A lot of people out here in California, most people I know that did pretty well, even if they worked a job like a teacher, or a policeman or a fireman, they retire with over $1 million. Now that is not income. Okay. It is people that have income over $1 million. So you're making close to $100,000 a month or more. And so the tax would apply to those people. So it is a small people. I had people on Twitter and stuff saying, well, if you don't make $1 million, this doesn't affect you. No, it actually does. Because imagine if the people that make over $1 million decide not to invest in the stock market, decide not to do startups, decide not to experience long-term capital gains. What if some of them can afford to go live in another country or go live in the Cayman Islands or go live on their own island and not have to pay any taxes whatsoever? So it is something that would trickle down to the entire economy, even people that don't make $1 million. And obviously a lot of us, like myself included, probably many of you out there as well, have a portfolio set aside where you're going to potentially use some of that money to retire. And then if all of a sudden the stock market starts going down because people are, millionaires and wealthy people are selling their stocks and getting out of the stock market because they don't want to pay a 40% tax, well, that is something that definitely would affect everybody, even if you don't make $1 million. Now, obviously, if you've seen the spending in Washington, they're going to have to either cut spending or raise taxes. And if you know anything about politicians, none of them are interested in cutting spending, no matter what they say. And so the likely outcome is we'll probably see a tax increase. I think a lot of people are here's the rub. Okay, here's I dug into this a little bit. You got Nancy Pelosi, who is in charge of the House of Representatives. Not to get too deep in the weeds of what's going on in Washington, D.C. I don't think it matters too much in the long run to the stock market and to you as an investor, but we'll talk about it here really quickly. Nancy Pelosi is in charge of the House of Representatives, in charge of a lot of the legislation that gets put in front of those voters. And then you have Chuck Schumer, who is essentially in charge of the Senate, and he is from New York. From what I read on Twitter, and again, you could take it with all a grain of salt what goes on Twitter, but from some reliable accounts, is that Nancy Pelosi and Chuck Schumer, both from very wealthy states, both of them, I know Nancy Pelosi is a multimillionaire. Chuck Schumer, I presume, is as well. I presume they have multiple multi-million-dollar donors and corporations that donate to them. Neither one of them, at least from what I heard, have any interest in raising the long-term capital gains rate as high as President Biden proposed. But we will likely see an increase. What I heard is we'll get into that 28, 29, maybe 30% range, which out here in California would put you probably in the mid 30s, maybe even upwards to 40%. Still a significant tax. And again, if you make over $1 million, but that's today. Who says 10 years from now, they lower that thresholds to people that make 500,000 or 400,000. The threshold can continue to get lower and lower. And obviously, as we have inflation, making $1 million today is not like making $1 million 10 years from now as well. So not to get too deep in the weeds on those types of things. The same thing that we see with the corporate tax rate. Okay, the corporate tax rate was lowered by our previous president, Donald Trump, and it was lowered to a rate that's kind of in line with most of the developed countries. It appears that there's probably support to raise that up another couple points, which if it's only a couple points, we go from, I don't know what it is off the top of my head. I think it's like low 20s. We'll call it 23, 24. If it goes to 25, 26, 27, 28, these companies probably have CFOs that are creative enough to get around that tax or kind of creatively not pay as much to the United States government, maybe do a little bit more reinvestment into their business. So we'll see. Taxes will have a big outcome on the stock market this coming year because, like I said, politicians don't have any interest in cutting spending. So what do they have to do? They're probably going to have to raise revenues. And where are they going to go? Multimillionaires and corporations. And look, if you're an investor, whether or not you're a multimillionaire or you're a part of a corporation or you own one or you work for one, all of that will affect you. So these things are all tied together in the economy. Now, What sold off during the week was Bitcoin. Man, it went below 50,000 as the cryptocurrency sell-off continues. In fact, I think it got as low as in the 40,000 range. Let's come over to our Bitcoin chart. We'll jump into our Bitcoin discussion right now, and then you can see here on the right-hand side of your screen the list of topics that we'll get to after Bitcoin. So this thing's sitting right at about 50,000. We broke a key level here right at about 52,000. Now, what we're seeing with Bitcoin right here at 50, we'll call it 58,000 on the nose. Again, give yourself, when I say these figures, 58,000, 54,000, we're talking about a huge number. So we're talking about plus or minus 2 or 3% on these numbers. So when you draw in your lines, when you're picking your levels where you might potentially want to buy Bitcoin or potentially sell it, if that's what you want to do, keep in mind that when I'm shouting out levels, we're basically rounding off numbers because we're getting to just a gigantic number here, 50, 60,000. There's some big swings in there. So just wanted to point that out. 58,000 is a key level though. Sellers stepped back in here in February. They stepped in here again in March, stepped in again March, April. We peaked above it, got above the 60,000 level. And then we got completely rejected. We got below this 58 level, and we're actually below another key level right at about 52,000. That is bringing this level down here at we'll call this 45,000 back in play. 45,000 was a level of support here and level of support here back in February and late February, March. 45,000 is a level where if Bitcoin pulls back to, I am inching into Bitcoin. Okay, I've had Bitcoin for a long time. I showed you my Coinbase account on last show. If you want to review that, it was towards the end of the video. I showed you my Coinbase account, my IRA, my Robinhood account. I showed you pretty much every stock that I own personally in my accounts. Didn't show you my wife accounts or any other accounts that I have, but that's the majority of what that I personally control. 45,000 would be a level where I would put some more money into Bitcoin, because we could potentially hold this level. Now if we don't hold this level, hello, we're coming down to probably this cluster of price action between 31,000 and 39,000. So you got to be comfortable with these big swings with Bitcoin. Okay. We're talking about, between 31 and 39,000. The other day we were at 64,000. So this thing is not for the faint of heart. And it is, in my opinion, probably for traders, if you want to trade this one. Now, I think there's only ways to trade this on the long side. I could be wrong about that. There's probably some derivatives where you could potentially short this, but you're really looking for levels where this is going to bounce. And then, you go long Bitcoin at that level and you make some money on the way up. Really, this 45,000 level would be the first level that makes sense to me as we pull down into it. We're about $5,000 away from it. That is 10%. Now, Dogecoin, I know we had Doge Day on 420, among other things that was probably going on that day as well. This chart doesn't look that bad. I've got a 1 month chart. If I shrink it down to 1 week, we see over the last, we're just on a steady uptrend. Okay, we bottomed down here 20 cents or so. Now we're up at 28 cents. This thing's just churning higher. There should be some resistance right at 30 cents. Okay, the sellers have kind of stepped in here at 30 cents. In fact, that's where our most recent kind of drawdown started, was right at that 30-cent level, and it drew down pretty considerably and has drew back up. You get above 30 cents on some volume on Dogecoin, and guess what? You're probably back up into the 35s, 40. A break, 45, 50 cents on this one is what you're looking for. You're looking for that on strong momentum. Now, this thing has just rocketed up, gone back down, rocketed up, come back down, and then rocketed back up. We'll see if the hype can continue with Dogecoin. Here, I got asked a lot about Dogecoin, not just in the comments of the videos, but I got friends, family, might have a couple $100. Some have thousands of dollars in this. And the question that kept coming up was, especially when it was making these rallies up into 40 and 50 cents, some of these people were making life-changing, 4, maybe even 5-figure profits in their Dogecoin. And they're asking me, when do I sell? And my response is always, basically this is, at some point with something like this, a Dogecoin, which has no real use. It's not like gold or silver, which does have some use. Even stocks where you're getting ownership in the company, ownership and profits, those types of things, are worth sometimes holding through the tough times and not necessarily trying to inch out every profit that you can get. Dogecoin, I think, is maybe a little bit different. At some point, I think you've got to take the profits off the computer screen and put them into your bank account. Now, what level that is different for everybody. Okay. I personally think I have maybe four. Last time I looked, I have, oh man, this went down quite a bit. I have $1,182 worth of Dogecoin, but I only have $205 in this. If this goes to zero, $205, my kids are still going to eat. My bills are still going to pay. Okay. Now, for other people, I have $979 worth of gains on this. Maybe somebody in a different financial position, this might pay a bill for them. It might allow them to buy something that they've always wanted to buy. It might allow them a different type of lifestyle that they don't currently live. And in those cases, I think you've got to take some profit off the table. If you have life-changing sums of money, and for some people, just being able to pay your rent for a month is I would consider that life-changing. We don't have to talk about like hundreds of thousands or tens of thousands of dollars. Sometimes for some people, being able to pay your rent for a month and maybe not have to take that extra shift at work or work overtime or whatever it is, that's life-changing. That allows you to relax a little bit and maybe get a little more me time than work time. For me, $200, who cares? I don't care if this goes to zero, but you better believe if an extra zero gets put on here and I have $11,000 worth of Bitcoin, you better believe I'm going to cash it out and I'm going to go buy something. I like nice watches. I like nice shoes. I like nice golf clubs, those types of things. Maybe get something for my kids and my wife, throw that in there as well. Although you get a nice Rolex, even like a entry-level Submariner's $10,000, $11,000 these days. Probably won't have a lot of money left over, but maybe I'll throw them a little something. The kids will just be happy with a Hot Wheels car. So you get my point. At some point, this becomes life-changing money. I think you got to take it off of the Robinhood account and put it into your bank account. That level and what that is up to you. Now, moving into earnings. So we had two different earnings last week, tale of two different companies. And it's really interesting that we're going to compare AT&T, although AT&T owns Warner Media and HBO Max. So in some ways, they are competitors to Netflix. But here's why I'm going to talk about AT&T. Two reasons why I'm going to talk about AT&T. Number one is their stock gapped up on these earnings and gapped up into a critical range. If we can pop up over above this with AT&T, I think you got some upside this. If you're like me, you have this in a long portfolio, you've been dividend reinvesting this. And some people might just be recently have bought into AT&T because it does have a nice dividend and it does have a cheap valuation, in my opinion, in many people's opinions. But I want to tie this also into our capital gains tax, okay? The way you get capital gains is you buy a stock or maybe even like Bitcoin or a house or anything, and the value goes up and you sell it and you are taxed on the profits that you make. It could be that if we get a capital gains tax, a significant one or even not a very significant raise, I think either way, I think we're going to see a capital gains tax at some point. I think that Democrats probably have the votes and the political energy to get something like that through. Well, guess what? That might make more attractive dividend paying stocks, because dividend, I believe, I could be wrong, a CPA could correct me in the comments, but a dividend is taxed at ordinary income, not at a capital gains rate. And so it could be that wealthy investors, people that make over $1 million, to make money off their stocks, it could be that dividend paying stocks become more attractive because the dividend is taxed at a different rate than the capital gains tax, and they don't have to sell the stock and realize that capital gains tax. They can realize some income off the stock, in this case AT&T, which is a 6 or 7% yield, and they don't have to experience that tax realization of that capital gains. So it could make stocks like AT&T rip roar to the upside for a number of different reasons. But what I see here too is a very, very nice chart. Now, this thing could break down. We could fill this gap. We made this nice little gap here on the way up. We were at $30 on this one. It announced earnings. It's up to 31, but there is all this airspace. This is like a Boeing 777 that is just taken off. Look at all this. I mean, we are not even close to full altitude on this one. Okay. That's what I see with AT&T. You've got all this price action over here. Yes, sellers will step in as we inch up on this one, but we are in a clear define. We made a low here, a higher low, and it appears next week, even if this one stays sideways, we are making another higher low on AT&T. And if we can bust up above, I would say probably closer to $32 on this one, 33, 34 is in play. You get above that, I mean, the sky's the limit, up to about $39 on this one. I think you got $7, $8 worth of upside on this one, and you could probably put a stop loss here at 29. So you got $7 in upside, $2 in downside, and you get a 7% yield, and potentially you get some tax changes that makes investing in dividend paying stocks I'm just going to say slightly more attractive than maybe the high flying tech stock, where you've got to realize that that capital gains, which could be an epically high rate for some Americans out there, especially the high earners. Now, Netflix did the reverse. Okay, Netflix was up here in the 550, 560, announced earnings, and gap down here to the bottom, not quite the bottom end of a range. We have a range marked out here, 493 up to about 515. It looks like this moving average wants to turn negative. Where would I buy Netflix? Down here at 470. Buyers have stepped in consistently at 470. That'd be a spot where I would be looking for Netflix. Now, the reason why we're talking about earnings is because we've got a slew of earnings next week. And whenever you have earnings, you have shifting momentum. You sometimes have big shifts in price, as we saw with Netflix, and to a certain degree, AT&T as well. And so on 4/26, which is Monday, we've got Tesla. Tesla just kind of isolated themselves. Not a lot of companies report on Mondays or Fridays. Tesla decided to put it on a Monday. We'll see if there's any significance to that. Maybe they have a big announcement. They want all the news to talk about it. Or maybe they think nobody's going to care on Monday and they can kind of blow over it. Tesla's earnings reports tend to be a little bit predictable because they report their delivery numbers on a regular basis, and you can sophisticated analysts can kind of back into the revenue and the profit numbers from there. But occasionally you have Elon Musk say some crazy stuff, sometimes in a good way. I'm not calling him like crazy in a bad way. Sometimes crazy in a good way. He says some stuff, very colorful things on a conference call that could move the stock up or down. Tesla's been on a monster run. We'll see if you have a pullback in this one. On 4/27, this will be Tuesday, you have UPS, Waste Management, Microsoft, Starbucks, A&D, Pinterest, Google, GE, and 3M. That is going to be a busy day on the channel. You might wonder why some of these stocks are in bold. These are the videos we will be doing 100% here on the channel. If you want to leave me down a comment below, if the stock is not in bold and you want me for sure to do a video on it, leave me a comment down below. That definitely motivates me to do some of these videos as well. Now, 4/28, I believe, is Wednesday. You got Shopify, Spotify, Qualcomm, Ford, MGM, Grubhub, Facebook, Teladoc, Apple, eBay, Boeing. And that is Wednesday. On Thursday, you've got Kraft Heinz, Caterpillar, Amazon, Twitter, Neo, and Chevron rounds out the week. Guys, this is just a small list. You've got a gigantic amount of companies that are going to be reporting earnings next week. Here's my plan when you have these major weeks. I'll tell you what, I want to show you my E-Trade portfolio really quick. So here is my E-Trade portfolio, and I showed you the stocks that were in this last week. If you want to review that, it's something that I'll do on a regular basis. They haven't changed over the last week. But the reason I bring this up actually for two reasons. number one reason I want to show you this is not to show you. I have the 3-year chart here. Now, E-Trade bought out I had this with another broker, and they bought it out. So this doesn't quite go back 3 years, okay? My performance, okay, you can see my performance in my IRA is up 95.87% over the last 3 years. Now, what I do want to point out, though, but I'll be honest with you, if you stretch this out to 3 years, it might be even higher than this because I've had a really nice run in terms of stock picking inside this portfolio. I'm up 95%. The Dow Jones is up 40%. The S&P 500 is up 56%. Again, this is over a 3-year time frame. The NASDAQ, which is, I'm a tech-heavy portfolio, is up 96%. So I am keeping track with the NASDAQ. I probably have a slightly higher dividend rate in this portfolio. I'm probably earning 2% and some change in this portfolio. I would say that my performance is probably as good or better than the NASDAQ, and you've seen at times I've actually outperformed it. Not necessarily something I'm trying to do, but I'm just showing you here to begin with, first of all, the performance of this portfolio over a fairly long period of time has been phenomenal. I had people in the comments say, well, anybody can be up for a year or 2 years. Here's 3 years. This is basically 2.5, a little more than 2.5 years of performance. And I can go back further than this if this portfolio allowed me to. But like I said, E-Trade bought it and then you kind of lose that data, but whatever. So what I wanted to show you, though, was that my plan in this portfolio is to rarely buy. I probably buy in this portfolio, my IRA account, I only buy stocks, I would say 4 or 5 times a year. I don't do a lot of buying. I don't necessarily do it all at once, but the times when I do heavy buying are weeks like next week when you have all these companies are reporting. Guess what? Some of them are going to be like Netflix. They're going to report and their stock is going to go down 10%, maybe even more than that. And you're going to have buying opportunities here and you're going to be able to buy the dip. And I'm going to show you that, look, over the last 3 years, this portfolio is up 95%. That beats the Dow Jones, that beats the S&P by considerable amounts. Okay, I'm way over this. And I'm right there with the NASDAQ, which would, I believe, probably a little bit safer portfolio, probably a little bit higher income than what the NASDAQ pays in terms of dividends and things like that. So next week is a critical week. Make sure you don't have to be glued to CNBC. You don't necessarily have to be glued to this channel, although I'd appreciate that if you hit the subscribe button and do watch some of our videos next week and share them with friends. I certainly appreciate that, but it's not necessary. But next week is a big week. Okay, I would definitely be in tune with what's going on with the individual companies and make sure that if you do have a big pullback in some of these stocks that are very well run, have nice profits, have nice futures, well, it could create fantastic buying opportunities for you heading into next week, because some of these stocks like Apple and Amazon and Facebook and Microsoft and even Tesla to a certain degree have been ripping to the upside, have pulled forward a ton of gains, have pulled forward a ton of stuff. We actually saw that with Netflix. Netflix was on a huge run. It was here at 490. And then a day before earnings, it was in the 560s. Okay. It had a big, massive run. And then earnings came out and this thing came all the way back. And so I think that you could have some opportunities in stocks next week when it comes to pullbacks on earnings. So I'd keep an eye on this. Now, most stocks report actually all stocks either report before the market opens. So in my case, out here in the West Coast, boy, it's sometimes 3 o'clock in the morning. I don't necessarily get to see all the earnings as they come across. Obviously, the market isn't open until a few hours later. So it doesn't necessarily matter when earnings come across, but you will see price action either in the morning or with most of the tech stocks that are, I think stocks that are listed on Dow Jones are typically listed in the morning. If you're NASDAQ, you're usually reporting earnings after the bell. So you'll have someone like a Tesla, a Google, an Apple, an Amazon. All these companies report after the bell, which is 1 p.m. Pacific, 4 p.m. Eastern time. If you see any kind of price action in the after hours, it usually follows through to the next morning. So you could plan a trade at night and then the following morning have an opportunity to pounce. As we saw with Netflix, it stayed at that lower level as the after hours pushed the stock lower. So hopefully you guys had an enjoyable show today. We'll wrap things up, get you on your weekend. Leave me a comment down below. Love to hear from you. Thanks for tuning in today. Good luck with your investments.